welcome to Scrolling with Ceazor. Today is January 28th, 2026. I got a big lineup of tweets for you. As always, though, I will start with this is not financial advice. You do with it as you please. This is all my own biased opinions based on the information that has been given to me from Twitter or X. Okay, so let's get right into it. So the first one here, I have Liquidity. This came to me via Liquidity. However, this is not a purely Liquidity thing. If we scroll a little bit in, let's go here. So it's a interview, a talk between a guy. His name is DeFi Advisor. I'll tag him, and you can give him a follow. He has this talk with Michael from Liquidity, the bold stablecoin, Martin from Curve, so I assume he's representing CRV USD, and then two people, Cyril and I can't make out who this other person is, from FX USD. Now the key thing about this is they are all in decentralized stablecoins backed by, decentralized ERC20 tokens. These are not, bank issued stablecoins on the blockchain. They're all pretty much, I wouldn't say they're all immutable. Like Liquidity stands alone in the sense that it's completely immutable. I'm not too sure about FX USD, but we know that CRV USD has the ability to make some slight changes, but they do run it as a DAO, so it's not some guy some guy will just randomly add some risky asset to it or something like that. And anyhow, so you can watch this. It is recorded, so you can kind of hop in here. It's an hour long. You can jump in here. I haven't listened to it all myself. I plan to listen to it after I do this talk. I'll put it up on 2x speed and just kind of hammer through it and listen to what they say. But yeah, I think this is a good thing to do. Like we need to have the counterpart of the TradFi banking system. Like yesterday I talked about Tether put out that USAT token, and it just sounds like, I don't know, I didn't do my research on it, but it just sounds completely like a central digital bank currency. Like it's just something that's completely compliant under the complete control of the government. They can probably do things like freeze your assets or reverse transactions and all this kind of stuff. Whereas these guys here, they built decentralized protocols that are permissionless. Like nobody can stop. Like I'm going to use Liquidity as the flag of this point here. Like no one can stop it. No one can change it. The Liquidity, you can always trade it. You don't have to ask anybody. You don't have to. It doesn't matter who you are. Like this is what we need for the world to become a little bit more fair. Like we don't. Like I'm a strong believer that the government should work for the people, but the way we see things now, it's more like the government's in charge of the people. And I don't really like this too much, but it is the world we live in. So you kind of have to navigate that dark forest as best you can. Anyway, so check out this podcast or interview or whatever you want to call it, this talk between these titans of the space, and decide if you like one. I do have videos on most of this stuff, but I don't have one on FX USD, but it's pretty straightforward. They're all worth checking out and probably considering using with some portion of your portfolio. But again, you do you, and you figure out what's best for you. Moving on, I've got a tweet here from Rameses. This is a protocol that I like to use for providing liquidity. They just say tomorrow, and it makes me wonder what's going to happen tomorrow. This was on the 26th, but it's now the 28th, so tomorrow's gone. I didn't see anything, but maybe today is there tomorrow. So we'll see what happens, okay? Moving on, we have a tweet by ETH Strategy. ETH Strategy is another protocol I'm biased on. I have substantial amounts of assets in them. I believe in them. I've got videos on their two systems. They have the Strat token, which is basically a leveraged long, unliquidatable leveraged long ETH position, and they have this ESPN thing that is basically a stable coin, a high interest rate stable coin that you basically lend to them to do their leverage ETH stuff. Okay, watch the videos if you want to know how it works. But they just dropped this new article calling how to earn like 30% yield on ETH strategy bonds. So you can read through this. I'm not going to read through this all for you. It's pretty inaccessible for most people. Like even me, I read this twice and then I still ask them some questions and like try to figure out what's going on here. But to give you an idea of what's going on, if you are a options trader and you're like pretty good at it, I would highly suggest you to check this out. If you're just like super left curve, but you got bags of money, you probably don't want to play this thing. You probably want to look at the ESPN system, because they're quite good at these bonds and call options and options trading and stuff like that. And if you get the ESPN thing, then you're kind of giving them permission to use your money to do ETH, basically to do those options options tradings. But here is for like some people that don't want to, that are maybe proficient enough to do options trading things themselves, then they can kind of take a look at this. It's basically, you give them some stable coins, you get where's the two things? You get you get this collateralized debt tokens, and you get this NFT, which is an out of the money call option on ETH with 4.2 year maturity. So you can kind of take a look at this and see what's there if you are an options trader and you're thinking that this is a cool place for you to kind of consider getting some tokens that you can use on Derive to do some options trading and scalping and stuff like that. So again, this is not really for everybody. This is more for like really big brain options guys out there that want some protocol where they can get borrow get some options trading assets to borrow. So check it out and dig deeper if you're one of those people, and I would suggest you read it anyways because it's pretty insightful. Like this point here, that like how like the key sweet spot is like these options that are like 3 to 4 months. They have the best interest. They have the best utilization basically. So anyways, take a look at this. It's interesting. It's clever. And so forth. And like I said, if you want to know more about eStrategy, I do have videos on their more hands-off products. Okay. Moving on here, Kobe tweets out, there should perhaps be a psychological study on the people that pick out random words from your tweets and make coins from them. Like quick guys, he said toothpaste. Quick, raid. Then they get annoyed and say, how come you aren't supporting toothpaste token when you previously used the word toothpaste in a sentence? Well, we all know what he's saying here. And I did reply to this. I'm sure my reply is not showing. No, let's click back. So I did reply to that, and I basically said, I think the study should be on the people who then go out and buy that token. Like those are the people I'm interested in, like the people who like enable them to do this, like, and then the people who actually incentivize them to do this. So, which is basically the shitcoin traders, right? And the protocols that allow you to basically instantly, quickly make some stupid toothpaste token. Okay, moving on. Here we have OGD Farmer. Okay, so let's read what this says. Okay, it says Hyperliquid now has deeper liquidity than Binance on most pairs, including BTC, and lower fees. And Jeff is based in rewarding your fidelity and not nuking your bags on 1010. Sex is our cancer. I, for one, am eagerly waiting for the inevitable flipping Hyperliquid. I like this. Like I'm. Like I've said it many times, and I'll probably say it again many times, that I think centralized exchanges are pretty cancerous, except, we kind of still need them for because they got banking licenses and you can use them as off and on ramps for the most part, and this kind of stuff. So we still kind of need them. A lot of normies still trading on chain. Like if you try to get your uncle to set up a Hyperliquid over SMS messages, You know what I mean? Like set up a Hyperliquid account, and he's not going to be able to probably do it very easily. You got to kind of go to his house and show him how to set it up and how to fund it and stuff like that. But and then also, you know, Hyperliquid, the Hyperliquid exchange, he's talking about spot, I believe, right? Actual spot BTC. But at the same time, like Hyperliquid is a decentralized exchange. Like anyone can kind of use it. I've heard a little bit in the past about they're kind of flagging people using VPNs and closing their accounts or flagging their accounts as suspicious and risky. So like there is a little bit of that, you know, a little bit of control in their hands, and maybe more than we would like. It's definitely not Uniswap or even like GMX. It has its own power, but it is a blockchain run by itself. Will it take over Ethereum and become the dominant financial layer? I don't really think so. However, I'd much rather use Hyperliquid than use Binance. That's for sure. And then some of the things he does say, like, you know, rewarding your fidelity and not nuking your bags on 1010. So there is like, people are blaming Binance for a lot of like wash trading and also just like extraction events, like, you know, liquidating people like by, you know, short sellings and stuff like this. So you can kind of think about it. I hope I still have hype bags. I provide them on Rameses. I'm providing liquidity on Rameses with that, or Ramses, whatever you want to call it. And so you can check that out. Check out DOG DeFimer and see what he has to say. Maybe he's got some other interesting things to say. Okay, moving on. So here we have Steven from the DeFi Dojo. He's a long-time follow. He's the calculator guy, if you will. Usually he's a stablecoin or ETH maxi, in the sense that, you know, he's mostly looking for yields on stablecoins. Like I would say he's a stablecoin maxi for the most part. Like no one's a 100% maxi, right? But he's finally done a tweet here. He's been grinding precious metals for the last little while. I guess maybe he might have gotten out, or he's kind of refocused his mindset on some of his stablecoin bags, and he's done this thing called the Stablecoin Awards of January 2026. And you can go through and you can see he's got one that's like the highest base yield, the most risk-adjusted strategies, the best Pendle opportunities, and the best Season 1 airdrop opportunities, best Solana stablecoin yields, and then that's it. So you can kind of go through his tweet and look at his top 3 of all of those and decide whether or not these are stuff you want to kind of participate in. Most of the stuff on here looks a little bit outside my expertise wheel, like or something like basically tokens that I'm not usually holding, or I haven't really put a lot of my research into. Like for example, if I just scroll through here, USD1, I don't hold any USD1. Athena, I have some Athena. I'm not holding any AUSD on Monad. He's got one here. Let's quickly, REUSDE. I'm not holding any of this. Ouroboros Capital 8. SYZUSD. I've never even heard of this. So yeah, like you can check through it. He does do his work. He does do his homework. So yeah, I check through it. But again, you know, do your own research and diversify, and don't put all your bags into a single stablecoin. Moving on. Here we have Wintermute Ventures. Now, I'm not a huge fan of Wintermute because of, you know, basically whenever you hear about Wintermute, it's always bad, right? It's always bad news. They screwed over this coin or that coin with their market making strategy. They dumped all over the chart, and now they're buying back the tokens that were lent to them. Like, so you usually hear bad news when you hear about Wintermute. But here they have an article that says Digital Assets 2026, the clearing layer of the internet economy. And they have a pretty long article. Now, this is Wintermute Ventures, and it was retweeted by Wintermute, so I believe it's official. But anyways, they're basically like, what are they looking at? And you can go through this article. I'm just going to read the headings and talk a little bit about them. I'm not going to read this thing to you. I'd read it yourself, but you can kind of go through these headings and kind of think about whether or not this is something interesting to you. So everything becomes tradable. So, like everything's getting tokenized, not just like derivatives, not just stocks, RWAs. You can buy tokenized uranium. Prediction markets are now, you want to bet on things, it's all tokenized, on-chain, tradable. So they're basically looking to invest in things that are bringing things that are maybe traditional finance tradable, but also things that are not not even tradable anywhere right now. And if you can bring it on chain, they will consider that a worthy investment for them. Stablecoins become the trust layer while banks handle the interim settlement. So you can read through that, and it's pretty straightforward. I think stablecoins are pretty much everywhere, and banks, I think banks, in my opinion, I think banks might just become liquidity providers of several stablecoins. Instead of, everybody being providing liquidity to 3CRV, USDT, USDC, and DAI. Maybe you'll have USDC and USDT or USAT, right? Liquidity pools provided by all the big banks, because it's relatively safe and for them, and there's some compliance done. The compliance is done with them. Okay, moving on, we have markets will reward durable revenue over temporary incentives. So yeah, they're looking at things that are sustainable, basically, instead of just sushi coins or food coins, APRs 20,000% APY. Instead of this kind of stuff, they're looking more for protocols that are built with a sustainable revenue generation effects, right? Moving on, DeFi will converge with fintechs. So we see a lot of this already happening. Of course, there are off and on ramps, but also if you look at Fractal and Fraxnet, they're kind of the one who's really focusing on trying to get the old fintech system and the new and DeFi kind of merge them together, or create that seamless bridge for these protocols. And then there's also other kind of fintech systems, not just purely stable coins in banks and stuff like that, tokenization of stocks and all this kind of stuff. Privacy becomes table stakes. So ZK and also all of the other privacy protocols out there, they're getting a lot of news, a lot of talk about privacy and how important it is to protect yourself from wrench wielding thieves, right? And how important that is. So yeah, I think privacy is still quite important, and I think the market is now hungry for it and not considering it just a way to hide crime. Regulation matures from a compliance hurdle into a distribution age, and then the internet economy lives on crypto. So yeah, pretty soon, all of internet commerce is going to be just using stable coins or some sort of crypto to transact. Why? There's no reason to use Visa to buy stuff if you can just use your stable coins that are, lent on Aave or something. So anyhow, you can read through this article. I thought it's pretty interesting. I think it's clever to at least pay attention to what they are thinking about, because they might set a new narrative. And I do have a long article at the end of this to talk about that can kind of see how you can use this to talk about it. Actually, I'll bring it over now. So this article by Pickle Cat. Now, Pickle Cat is someone new to me, but he has been around for quite a long time. He's got this article here, and it's pretty long, but it's what I would call fantastic. And for some reason, my computer stopped scrolling. But Okay. So Pickle Cat, he lays out his like how to not get wrecked. So he's like anyone can make money in crypto. Anyone can, but most people who make it then turn around and lose it because they continue to gamble. So they get a lucky gamble and then they make a bag of money and then they think they're intelligent and smart and they keep gambling and then they lose it all. Stuff like this, okay? It's the people who are still around after years and years and they're still like they still had it, and he kind of goes through and it's really long, okay, but it's I read it all yesterday and I think it's pretty worth reading, especially for someone who's like a little bit past new. If you're brand new, then it might be a little bit too much for you. But if you're kind of been here for a little while, it's good to kind of read it because he talks about all like how to spot narratives and how to move and stay at the top of things, and how there's this area at the end where he talks about like emotional anchors and how to like use logic instead of just emotion to make plans. Like this is why one of the things he talks about is like taking profits. Like, do you like change your taking profit target because it's still gonna keep going, right? So I don't. The way I do this is I provide concentrated liquidity, and when it leaves the top of my concentrated liquidity, I generally exit it, and now I'm in stable coins, or interest-bearing stable coins for the most part. So I set my ranges with concentrated liquidity, but you don't have to. You can set your ranges with just like limit orders, or you can set your ranges with just manually watching the price charts and saying, when it hits here, I must sell. But he talks a lot about like how to control your emotions, these behavior. Like it's definitely a good read, and like it's long, but it's not blabbermouthing. He's not blabbermouthing the whole time. He's actually dropping legitimate, useful information almost the entire time. There's a lot of like, this whole like Old Testament, New Testament analogy stuff. There's some of it's fluff, but for the most part, it's a worthy read. Okay, moving on, we have Zach XBT. If you don't follow him, you just follow him, okay? And he's always like showing these like bad actors in the space, okay? Now you know who he is probably, but anyways, so here he is showing John Daghita, who stole like $40 million from the U.S. government Ceazor addresses. I don't know how he did it. I didn't read through this, but he's like, here is John, steals all this money, and apparently like right now he's like, he launched a coin on, and it's not on this tweet, but anyways, I wanted to show the actual. So like, yeah, he's launched some coin. He's got like 40% of the supply in like some wallets that are connected to the individual wallet, and it's just like, stop letting these people take all your money. You know what I mean, guys? Like, just stop buying like shit coins, meme coins that are like pump fund coins, and buy something or put your assets into something that actually is helpful and useful and good for everyone to some extent. Of course, you might get hacked, but like, do some due diligence. Check out the Lindy effect. Like, just be a little bit more careful about stuff. But anyways, here is a tweet from Zach XBT just kind of exposing this guy. I like stealing $40 million from the U.S. government Ceazor addresses. I don't. That's pretty crazy. Like, I might just dig into this and kind of see if he explains how it was done. But I don't really see how he was like. This doesn't look like a postmortem on how he was able to steal those funds. But anyways, let's move on. Here we have an article by Garrett Bullish. I don't know this person. As you can see, I'm not following him, but I'll just follow him. So he wrote this article about the scarce asset in AI applications, and he's basically shilling ETH as the place that AI agents are going to interact. They're going to transact. So ERC 80004 is approaching mainnet. He says it's basically a standard for AIs to interact with one another, to basically transact with this. I don't know the exact details. I'll probably have to dig a little bit deeper, but the way I just want to mention that, like the way I think about it, like if you're like AI bots, all you care, you don't care about who looks cool, you don't care about who talks, who has a bald head, you don't care about what these stupid humans are doing. All you care about is, can I interact with this in a safe manner? And will this platform be alive if all the humans are dead? You know what I mean? This is the kind of thing that AI agents are going to be thinking about. They're going to be predictability and dependability are paramount to AI agents, in my opinion. So where are they going to get that? ETH, like Ethereum. Ethereum's like the most resilient blockchain of them all. And of course, we are kind of consistently upgrading it and stuff like that in a human manner. Like there are, things happening, changes being hard forks even but in humans doing these things to this blockchain, it's not completely immutable and unchangeable. However, it has been proven to be quite dependable. Okay, so anyhow, you can read through this article. I didn't read it, sorry, so I don't really know all this stuff, but it's a long one as well, and he's just basically talking about how AI and this like ERC 8004 is kind of comes together. I plan to actually read this and see what it says, but I thought I would share it with you guys before I really dig into it. Okay, so here is a chat I had recently. So part of this chat with Rectimedes. So Rectimedes is like, what's with these goddamn gold prices? Like token silver and gold just like mooning like crazy. And then I said there's also this, and I did a chart of like how the US dollar basically dumped against the world. And then he's like, yeah, clearly the dollar is down. And then someone asked, why does Trump want the dollar down? And so this is where I want to start to kind of read through this. Okay, so Rectimedes says it's typical, makes stocks go up. It's good for the U.S. trade and manufacturing. It's paradoxical, as you would think dollar up is good for America, but it actually isn't, although it's very nuanced. Luke Groman has a lot of great content about it if you're curious. And then I said it's good for international. I say it's good for international input, but not great for domestic or export. Basically, it's a good way to encourage a lot of foreign investment, but not good for buying products to import. And then Captain Rationale kind of corrects me because I do see a little slight, maybe my terminology is a little bit wrong in that, especially with that word I put export there. So he's like, decreasing dollar value turns the U.S. into an exporting nation. As compared to importing. More valuable foreign currency makes it relatively cheaper to import from the US. A devalued dollar is a requirement to repatriate supply chains, build out domestic manufacturing, which we haven't seen in decades. So I made a small mistake when I said it, but not great for domestic and export. That word export right there is kind of bad. Is wrong. It's literally wrong. And even he corrects me on the domestic as well. It is good for domestic manufacturing. So if you think of the way I'm thinking about what he's saying and the way that I'm thinking right now about this is quite simple. If the dollar goes down in value, more money will come into the country. So people will build more factories in the country. And then it's also cheaper for other countries to buy American products because they're using foreign currency to buy US dollars than to buy those American products. So more factories get built in. So that's great for domestic production, domestic jobs, the domestic economy, but it's bad for buying foreign products. So most products in the US right now are foreign products, for the most part. So, in the short term, it's kind of bad because people go to the store and, they get less for their money because their money is worth less. But, it encourages growth of domestic production, as well as other countries are then more encouraged to buy American products. So anyways, I just replied logic, and he's right, and he clarified what I said, and actually I'm wrong in what I said. If you really dig deep and look at the stuff, I exactly what I said. I was kind of quick before coffee replying. Anyhow, moving on. So here we have rip.eth. L2 transactions are only up. Over the last 5 years, L2s accelerate Ethereum scaling. So he's got a chart of L2 transactions and Ethereum transactions. Ethereum transactions look pretty stable and straight a line across on this chart. But L2 blockchains is up almost to 1 billion, which is pretty crazy, a lot. So L2s they're working, unquestionable. There's maybe too many L2s or a lot of L2s that are just pointless and useless, like forks of actual L2s that are in demand and being utilized. But everyone try to set out their niche and build their own L2 that has a specific use case and so forth. So you can kind of check that out, think about this, figure out where you stand on L2s and stuff. But I do like the L2 system. It does allow for a lot of composability, a lot of customization, and you still kind of have Ethereum as your underlying settlement layer. Okay, moving on. Here we have Stacy Murr. She's retweeting an article by ValueVerse. ValueVerse did an article on basically tokens that are using revenue to support their token, basically. So whether it be buybacks or a revenue share and so forth. So in the image here we have Curve, Yield Basis, Aerodrome, Velodrome, Pendle, Aave, Pump Fund, and Hyperliquid. But let's kind of look through what Stacy says here. So it's like, if you invest 10,000 in Aero, you get 4,100 per year in actual yield. But then you still hold the Aero tokens. If you invest 10,000 in Uni, you get $56 a year. So it's pretty obvious which one is a better. Now, whether or not I want $10,000 worth of Aero to get $4,000 this year, that's a question for you, because it's getting out of that Aero is a little bit difficult, because then you have to sell that VE NFT on the secondary market, and you usually get about 80% on the dollar. So if you spend $10,000 on Aero and you want to sell it, you're going to get about $8,000, assuming the price stays the same, right? So there's a lot of things to think about at this, but that article is pretty good. But she kind of goes through and kind of distills it down to a little bit less of a read. So fee sharing tokens. The multiplier. So Aero is a 2.4x multiplier. Pendle's a 3.77 multiplier. CRV is a 6.4 multiplier. So the results lower equals better value. So yeah. So basically, how much money do you need to put into it, and then you get. So like the 2.4 multiplier means that Aero is a better investment than CRV, because it's giving more. The difference, that the amount of money you have to put in is about 2.4 times more than what you're going to get in a year, right? So yeah, you can think about that and kind of look through these, and the buyback tokens aren't doing too great, but yeah, you can think about this article and think about whether or not this is something you want to do. I don't really like to buy any of these tokens. I'd rather farm them with my capital, but then I'm in slower, and I'm definitely not getting $10,000 worth of Aero tokens every month or even maybe even a year, right? So I don't know. Let's keep moving. Moving on. Here we have DeFi Investor. He's talking about MakerDAO. Or Sky ecosystem, right? So Sky, formerly MakerDAO, is quietly becoming the most profitable dApps in DeFi. Its estimated annualized return is 399 million. It keeps growing every year. Yeah, it's kind of, and then Paper and Imperium does correct him. He says this number is incorrect. It includes major expenses. For reference, Sky lost 8 million in Q3 25, which is the most recent report. Do not go by the dashboard unless you understand what is not included. You're referring to earnings, not revenue. Revenue is the total income generated from sales and goods and services. Earnings is the profit remaining after deducting all expenses, including taxes. So they're kind of arguing about the terminology in exact terminology. But it's not like I hold SUSD. There's some FUD on it, but at the same time, it is clearly. It has Lindy. It is clearly a stable coin. There's always a little bit of FUD floating around, but I don't feel too worried about SUSD. USDS, right? But anyhow, you do some research, figure out whether or not you want to use this token or not. It's definitely not the best stable coin in my opinion. There are better ones, but there are different stablecoins for different purposes, right? Okay, I got a few more. I got Etherscan retweeting something called Etherscan cards drops. First airdrops, you can use drops.bot to do this. So I tried to do this. I went to my Ceazor.eth, and so you put in your address, right? And then you find this thing. You click on cards, right? And then there are these cards here that are new. I don't see the drops.eth one or the drops one. It just doesn't show up for me. But there's some cool information in here. There's vaults.fyi. There's like some POAPs, some my credit score. I'm very low risk. The wallet trust score, I'm medium. I don't like, so you can kind of play with this. This is something new that I haven't seen. I didn't know about, so I kind of clicked in here, and there are some protocols that are adding things to this to kind of, you can kind of consider this like a place for advertising, perhaps, or a place for you to, find some more information about wallets. You can click on these cards and kind of look through this and so forth. So I think it's interesting. Whether or not I think it's super useful, I don't know. Anyhow, let's move on. I got one more tweet here from ETH Strategy, which is just a line of so I'm laughing because they've drawn this extra blue line here. I've kind of clicked into it. So this is the ETH validator queue. So remember a little while ago the exit queue was high, and everybody was fudding, ETH, everyone wants out of their ETH validators, and they kind of blah, blah. And then now that queue has been exited, and the input is all-time high. And then they've drawn on this line like it's just going to keep going up and up and up. So their point is like as the ETH queue just gets more and more and more filled up, then validation rewards go down. So then people start putting their ETH somewhere else. So, and it kind of tweets or discover more, and it kind of talks about that 30% yield on those call options things that I talked about at the beginning of this podcast. Okay, so that's it for today. I hope this has been interesting and useful. There's a bit of homework for me. I got a few things I want to read from this research and dig a little bit deeper. So thank you for listening, and goodbye.